Hey everyone, welcome back to Corporate Decoder, the place where we unravel the hidden stories behind the financial world. Today, we're diving into NorthWestern Energy Group's latest filing, and let's just say they've been busy securing some major funding in the background. Think of it as a big financial handshake that could shape their near future. Before we get into the nitty-gritty, if you love getting straight smart insights from these sometimes dry corporate documents, make sure you hit that subscribe button. And if you're looking for more in-depth discussions and a great community, join our Discord server, linked down in the description. So, what is the big news? NorthWestern Energy, or NWE as they retraded, has just boosted their borrowing power significantly. They entered into an amendment to their existing term loan credit agreement. Now, this might sound a bit technical, but think of it like this: they had a loan and they just restructured it to get more cash and bring in a new partner. Specifically, they've taken their original $100 million loan and bumped the total available amount up to a whopping $150 million. This increase wasn't just about getting more money, it also involved bringing in Mizuho Bank Limited as a new lender. So instead of just dealing with US Bank, they now have two major banks backing them. Bank, by the way, is still in the picture and is now also acting as the main administrative agent for the loan, sort of like the lead conductor of this whole financial orchestra. And here is a key point: the company hasn't just increased their borrowing capacity, they've actually gone ahead and borrowed the full $150 million. This tells us they needed this capital, and they needed it now. This wasn't just a preliminary step, this is a done deal, and the cash is in hand. Now, let's talk about how this loan works. It is important to note that this term loan is unsecured. That means there is no specific asset backing this loan. If things go south, the banks can't immediately seize a particular power plant or piece of equipment. This usually means the interest rates might be a bit higher or the covenants a bit stricter to compensate for that risk. The interest rate itself is variable, tied to something called the Secured Overnight Financing Rate, or SOFR, plus an added margin. This means their interest payments will fluctuate depending on market conditions. It is a common practice, but it adds a layer of unpredictability to their borrowing costs. The repayment deadline for this substantial loan is the 10th of April 2026. That gives them a little over a year and a half to manage this debt. While they can pay it back early, they can borrow what they've already paid back. This suggests they looking to use this money for specific projects or general operational needs throughout this period. The proceeds are designated for the general corporate purposes of the company and its subsidiaries, which is quite broad, meaning it can be used for a variety of initiatives. Now, let's look at the strings attached. The company has to adhere to a specific financial condition. There is one main financial covenant, which means they must keep their consolidated debt to total capitalization ratio at or below 65%. This is a crucial metric. It essentially means that no more than 65% of their entire capital structure can be made up of debt. Crossing this threshold could trigger a default, so it is a tightrope they be walking. They also have other covenants that restrict them from things like mergers, selling off major assets, unless it is almost everything they own, taking on too much new debt with high interest rates, and engaging in certain deals with affiliated companies. On the flip side, there are serious consequences if they miss a payment or violate these terms. An event of default can be triggered by, among other things, a cross. Default, this means if they default on other debts totaling over $50 million, it automatically flags a problem with this $150 million loan, potentially causing it to become due immediately. Other triggers include a change of control, meaning if ownership of the company fundamentally shifts, or if they face massive judgments against them for $50 million or more that aren't covered by insurance. And of course, any major bankruptcy or pension-related issues could also put them in hot water. It is also worth noting the relationship with the lenders. US Bank and Mizuho Bank and their affiliates are not just lenders. They also do other lines of business, including investment banking and general financing. This means they've worked with NorthWestern Energy before, and they'll likely continue to do so for various financial services, earning customary fees along the way. This is a normal part of the banking world, where relationships extend beyond just a single loan. And to wrap up the official filings, they've included the amendment itself as an exhibit, along with the standard interactive data file for the cover page. Now, let us put on our investor hats. NorthWestern Energy has just secured a substantial amount of capital, $150 million. This is pocket change. It suggests they have planned investments or operational needs that require significant funding. The fact that they borrowed it all immediately signals confidence in their ability to deploy these funds effectively, or a pressing need for immediate liquidity. The unsecured nature and the variable interest rate are points to monitor. While unsecured lending can offer flexibility, it also means the company's overall financial health is the primary guarantor. The covenant on debt to capitalization is a critical health check. Keeping that ratio below 65% will be paramount. If they approach that limit, it could signal financial strain or force them to curtail growth initiatives. The maturity date of April 2026 means this debt needs to be managed within the next year and a half. This could mean plans for refinancing or using free cash flow to pay it down are already in motion. The broad use of proceeds for general corporate purposes is typical, but it does leave some questions about the specific projects or strategies this capital will fuel. Looking at the broader picture, NorthWestern Energy is in a capital-intensive business. Securing this kind of financing is not unusual, but the size and the immediate drawdown indicate significant ongoing activities. The key risk here, as with much of the market, is interest rate volatility and maintaining that debt to capitalization ratio. If interest rates continue to climb, their borrowing costs will increase, putting pressure on their profitability. Overall, NorthWestern Energy is taking a significant financial step. They've bolstered their cash reserves, but with that comes increased financial obligations and covenants to manage. The company's ability to grow and maintain profitability will be closely tied to how effectively they deploy this $150 million and navigate the economic landscape over the next year and a half. And that is our breakdown of NorthWestern Energy's recent financial maneuver. What is your take on this significant loan increase and what it means for the company's future? Let us know your thoughts in the comments below. If you found this deep dive valuable, please hit that like button and subscribe for more straightforward financial analysis. And don't forget to join our Discord community for even more discussions. Thanks for watching, and I'll see you in the next video.